Today, I'm going to share some content you just can't ignore. Stay with me here. Because have you ever noticed your auto, home, or business insurance premium going up even though you have not filed a claim? If so, you are not alone. Many people are opening their renewal notices and asking the same question: why is my insurance going up and what can I actually do about it? I see firsthand how rising insurance costs are affecting families, homeowners, drivers, business owners, and retirees. So stay with me until the end, because we're going to talk about why insurance rates are rising, what parts you cannot control, and more importantly, the things you can control to make smarter decisions about your coverage. So let's get started. Before we talk about what you can control, it helps to understand why rates are rising in the first place. Insurance premiums are not going up for just one reason. Several things are happening at the same time. First, repair and replacement costs have increased. For auto insurance, vehicles are more expensive to repair than they used to be. Many cars now have cameras, sensors, computer systems, lane assist technology, backup cameras, and other safety features built into bumpers, mirrors, doors, and windshields. So what used to be a simple bumper repair may now involve technology, calibration, specialty parts, and more labor. For homeowners insurance, the cost to repair or rebuild a home has also gone up. Roofing materials, lumber, labor, plumbing, electrical work, appliances, and general construction costs are more expensive than they were several years ago. Second, weather-related claims have become more severe. Storms, hail, wind, hurricanes, tornadoes, flooding, wildfires, and other weather events have created major losses across the country. Even if your home has not had a claim, the overall claim activity in your area or state can affect insurance pricing. Third, claim payouts are higher. Medical, legal expenses, vehicle and home repairs are all higher. When insurance companies pay more in claims, they adjust rates to keep up with those costs. Fourth, some areas have become harder to insure. If a region has frequent storms, higher accident activity, rising theft, higher rebuilding costs, or other risk factors, insurance companies may become more cautious. That can lead to higher premiums, stricter underwriting guidelines, or fewer options. Now, I understand this can be frustrating, especially if you have been responsible and have not filed any claims. But insurance rates are based on more than just your personal history. They are also affected by claims, trends, location, repair costs, coverage levels, and company rate adjustments. Now that we have looked at why rates are rising, let's separate what you cannot control from what you can control. There are some things you simply cannot control, like 1, you cannot control inflation. 2, you cannot control the cost of building materials. 3, you cannot control the cost of vehicle parts. 4, you cannot control severe weather. 5, you cannot control how many claims are filed in your state. 6, you cannot control how expensive medical care or legal settlements become. 7, and lastly, you cannot control how each insurance company adjusts its rates from year to year. That is the part that can feel frustrating. You may do everything right and still see your premiums increase. But here's the important point. Just because you cannot control everything does not mean you are powerless. There are several areas where you can take action. So let's move from frustration to action. Here are some things you can control when insurance rates are rising. The first thing you can control is your deductible. A deductible is the amount you pay out of pocket before the insurance company pays on a covered claim. In many cases, choosing a higher deductible may help lower your premium. But be careful. Do not raise your deductible so high that you will struggle to pay it after a claim. The goal is not simply to find the cheapest policy. The goal is to find the right balance between monthly savings and financial protection. The second thing you can control is your coverage review. Many people buy a policy and then leave it alone for years. But life changes. You may have bought a new car, added young drivers, paid off a vehicle, renovated your home, finished a basement, started a business, bought rental property, or changed jobs. When your life changes, your insurance should be reviewed. Keep in mind, a good policy review can help identify missing discounts, outdated coverage, gaps in coverage, unnecessary coverage, or limits that no longer fit your coverage situation. The third thing you can control is bundling. Sometimes placing your home and auto insurance with the same company can create a discount. In other cases, splitting policies may still make sense. Bundling is worth reviewing, but it should not be automatic. You want the best overall fit, not just the biggest advertised discount. The fourth thing you can control is your claim strategy. Insurance is designed to protect you from financial loss. But that does not always mean every small repair should become a claim. For example, if the repair cost is close to your deductible, it may be worth having a conversation before filing. Some claims can affect future pricing or eligibility. That does not mean you should avoid legitimate claims, but what it does mean, you should understand the possible impact before making a decision to go forward with a claim. The fifth thing you can control is maintenance. For homeowners, insurance companies are paying closer attention to roofs, plumbing, electrical systems, trees near the home, handrails, steps, and overall property condition. Keeping your property maintained can reduce risk and may help prevent problems later. For auto insurance, safe driving still matters. Accidents, tickets, distracted driving, and frequent claims can all affect premiums. Some companies also offer safe driving programs or telematics. These programs may provide discounts based on driving habits, but they are not right for everyone. It is worth understanding how they work before signing up. The sixth thing you can control is your information. Make sure your policy details are accurate. Are the drivers listed correctly? Is the vehicle usage correct? Is the annual mileage reasonable? Are all eligible discounts being applied? Is your home replacement cost updated? And lastly, are there past vehicles, former drivers, or old coverage details that need to be cleaned up? Small details can make a difference. Now that we have talked about the areas you can control, let me give you a simple rule of thumb. If your renewal increases by around 15% or more, that is a good time to review your policy to determine if it's time to shop around for other insurance carriers. But that does not automatically mean you should switch companies. Sometimes your current policy may still be the best option, especially if you had a claim, accident, or citation during the policy period, which most people don't take into account. However, in the end, a 15% increase is a good signal to ask these questions. For example, 1. Did your coverage change? 2. Did a discount fall off? 3. Did the company adjust rates in your area? 4. Did your claim history change? 5. Did the replacement cost on your home increase? 6. And are there other carrier options available? The key is to review before making a quick decision. Sometimes the answer may be shopping the policy, adjusting deductible, correcting information, updating discounts, or restructuring coverage. The point is, do not ignore the renewal notice. Make sure to review it. Now, after reviewing a rate increase, the next thing to remember is this. Be careful about cutting coverage just to lower the bill. When premiums go up, it is natural to look for ways to save money. But cheaper is not always better. If you lower your liability limits too much, remove important endorsements, reduce dwelling coverage, or choose a deductible you cannot afford, you may save money now, but create a bigger financial problem later. For example, reducing liability coverage may lower your premium, but if you are involved in a serious accident or lawsuit, low limits may leave you exposed. Dropping important home coverage may save a little money, but it could hurt you at claim time. That is why the goal should be smart savings, not sacrificing coverage. You want to control costs while still protecting your home, vehicles, income, family, and future. Once you know what to review, it helps to have someone who can explain the options clearly. This is where working with an independent agent can make a difference. An independent agent is not limited to one insurance company. That means I can help compare options, review coverage, explain discounts, and look at more than one carrier when appropriate. Sometimes the best recommendation is to stay with your current company. Sometimes it makes sense to shop. Sometimes the better answer is changing deductibles, correcting policy details, updating coverage, or improving how the policy is structured. My job is to help you understand your options in plain English so you can make an informed decision. In the end, you can't control insurance company decisions in the marketplace, but you can control how often you review your policy, how your deductibles are structured, whether your discounts are updated, how you handle claims, how you maintain your property, and whether your coverage still fits your life. If your renewal has gone up, do not panic. Switch to another insurance agent or automatically cancel your coverage. Talk to your agent and to take time for a review. This will help you carefully decide what's next. Now, if this content was helpful, place a thumbs up in the comments section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video on your left for more insurance and financial tips. And as I like to say, call Jay today.